Welcome back. Hope you're having a fantastic day. And we are going to take a look at the markets and Bitcoin and cryptocurrency and see what happened, what has happened here in the last couple of days. It's been a wild ride on Wall Street and continues to be for cryptocurrencies as well. And I want to introduce the newest cryptocurrency to the market, oil. So this is our newest altcoin. Does this chart not look like an altcoin or what? Just oil popping all the way up to $130. Dropped to $104. Interesting times in the commodities market, but a lot of speculative play, a lot of speculative money went into oil yesterday, and it's selling off now and bouncing around. So we will see where it goes. And of course, a lot of it is going to depend on how things shake out here with the situation in Ukraine. The dollar down big today. Of course, the dollar was up yesterday. Gold was up yesterday, down again today. Peter Schiff's having a rough day today, but it is what it is. That is your flight to safety play right there, liquidating today. So let's look at the chart of Bitcoin and see what's going on. And Bitcoin is continuing its range here. And yesterday we talked about the new cryptocurrency regulation. It got leaked last night. Janet Yellen kind of leaked her statement on it. So there was a lot of excitement. A lot of people were thinking that that's why crypto pumped. But at the end of the day, I mean, it kind of pumped when that came out. But these are basically short liquidations. And then, of course, we're still ranging between areas of consolidation or accumulation, consolidations, and distribution. And that's kind of what's going on as we've been, as Bitcoin has been creeping its way down. It's been in this little range here where it drops, accumulates, markup, distributes, drops, accumulates, markup, distribute, and just kind of doing that over and over in this range. Now, the good thing about this and the signs for, price to potentially turn around is you're putting in higher lows. Bitcoin's putting in higher lows as this happens, but unfortunately, it is not putting in higher highs. That's the only thing that concerns me about this range right here that we're in. Although last year, same thing, it was putting in lower lows and lower highs, and then it pumped. But right now, these highs are kind of leveling off. They're not really increasing. Bitcoin is yet to put in a higher high, but it is putting in low or higher lows along this path here. And we've kind of charted the triangle. I know a lot of people, a lot of analysts out there are looking at this rising wedge pattern. Problem with a rising wedge is if you go by the wicks, it's kind of hard to tell what's going on because you have the wicks and you have the close, and it creates a couple of different patterns based on what you're using. And different traders in traditional markets and in crypto markets, technical analysts, some prefer to use wicks, some prefer to use the closes. There really is no right answer or wrong answer. What technical analysis is, what the charts are, is you're just charting price activity, you're charting investor psychology and price action. So that's really all it is. So it doesn't really tell you anything about what's going to happen, but it tells you what is happening, what has happened, and you can look back and kind of see the historical patterns in the charts and kind of maybe get some ideas and predictions and probabilities about where price is likely to go. So this is one probability here as price kind of continues in this range here and does something like this. And then generally what most people are looking for is a breakout after that in a rising wedge consolidation like this. And of course, depending on what's going on and given the climate that we're in and the market that we're in, there's no telling. This could potentially break down as well, given the economic environment. QE has ended, so QE is no more. CPI comes out tomorrow. That's the inflation index that's going to come out tomorrow morning about 8:30. So there's a lot of speculation on that it could be 8% to 10% if they report the numbers accurately, which of course doesn't include any of the information since the war has started. That's just looking back, February look back, and then of course they'll revise January numbers as well. But it's likely to be high, so you'll see markets react to that news. If it's higher than expected, markets will sell off. If it's lower than expected, markets might bounce a little bit. But given the rally that we had on Wall Street today, with the Dow Jones up 2%, S&P up 2.5%, and NASDAQ leading the charge at 3.59%. Nice little bounce for the NASDAQ today, but of course the tech sector has taken the biggest hit overall in this sell-off that we've been experiencing here lately. So you're likely to see some downward pressure tomorrow after a bounce like this, because what happens, we had a big sell-off yesterday in the markets. It's been kind of, down for the most part lately. And you get these big sell-offs and you get these technical bounces, the buy the dip technical bounces. And a lot of those things are programmed in. A lot of them is retail coming in and absorbing and buying in on those dips because of the buy the dip conditioning that's been in the markets over the last few years. But let's look at the real results of what that looks like. And of course, Bitcoin's been kind of going through the same thing, drop by the dip, drop by the dip, drop by the dip, and just kind of the same thing, because that's the expectation, is this price is just going to continue to go up. And in the past, it generally does, but now we're in this range, and we have the economic headwinds, the geopolitical climate that we're in, and potential escalation, although the news today is that Ukraine is motivated to negotiate a ceasefire, as Russia claims that they are as well. So hopefully things can get resolved quickly, and a negotiation to stop the war can take place. And then what we'll be dealing with then is just general economic fallout from the conflict, and the future actions of the Fed and what the Fed has to do to combat this inflation. And a lot of people thought the Fed would come out a little bit dovish. They really can't. They have to come out a little bit more aggressive to battle inflation. So I know everybody's been expecting a 25 basis point interest rate hike. They may come out with a 50 basis point rate hike. So we'll just have to wait and see. And we haven't heard a whole lot of talk out of the Fed about what they're going to do next week. So they're going to look at the inflation print. They're going to make those decisions next week. And here is Bitcoin on the daily. And if you look at Bitcoin, it's just kind of, doing this little thing that it does with a distribution drop, accumulation markup, distribution drop, accumulation markup, same thing, kind of up and down on the daily in that range. But let's take a look at the Dow Jones, and kind of the same thing over here in terms of the price action. Big sell-off, buy the dip, pump, drop by the dip, drop by the dip. So that's kind of how these sell-offs work in terms of the deleveraging and ultimately moving to the repricing. The NASDAQ again had a big down day, got bought up, dropped again, bought back up. But these rebounds are putting in basically lower highs. So you're still putting in lower lows and lower highs. At the end of the day, these bounces are great. They're good liquidity, liquidity bounces where a lot of liquidity is created and sopped up. But at the end of the day, you're putting in, the markets are putting in lower lows and lower highs. So we have to keep that in mind. Until that reverses, it's still in a downward trending market with the reversion to the mean, headed back down from a deleveraging standpoint and a repricing standpoint back to where the market really should be from accurate pricing levels and things like that. As we know, stocks have been largely overvalued over the last couple of years with all the QE thrown into the markets. And we'll jump back on the hourly, take a look at Bitcoin, and we'll just have to wait and see, is this going to repeat this pattern again like we've seen over in this area? Another little consolidation phase, pump up and then roll over, or is price going to continue upward? The most likely scenario is it's going to continue to have a little bit of a drop again, and but these drops are getting higher and higher in terms of the lows. So it's been bouncing off these lows, 36,000, 37,000 range. So we'll see where Bitcoin goes, and if it stays in that 38,000 range, then continues to keep putting in higher lows, it could creep its way up and continue to kind of plug along through this situation until we see more clarity, more direction in terms of what the Fed's going to do and what the regulatory environment looks like. And like we said the other day, regulation is good for Bitcoin in the cryptocurrency market. The market's reacted positively to that because at the end of the day, that brings more capital into the markets. The more clarity you have, the more regulation you have, the better investors feel about getting into the market, and the more safe and secure they will feel about getting involved in cryptocurrency and things like that. So altcoins are kind of following the same path. Everything's been kind of trekking along. I know that we've been talking about and waiting for alt season. One of the thoughts that I have when you look at total two, especially on the daily, is that alt season may have already happened, and it may already be gone for now until we see a retracement of significance with Bitcoin. And the retracement from Bitcoin could have already happened in here. Alt season ran with it, and we could just be in a longer consolidation phase waiting for another run. And if that's the case, that's a pretty good consolidation range based on comparing to where Bitcoin came from last cycle after the March pandemic, and right before it, it was in the $7,800 to $10,000 range. Had the March pandemic, dropped down to 45 and came back into that, $10,000, $11,000, $12,000 range again, and then ran up to 64. So that was your, Bitcoin's consolidation range after the 2017, 2018 bull market consolidation, dropping down to major lows around 4,000. And that was a long time period for Bitcoin to consolidate. So there is a potential that Bitcoin could consolidate around this area, dropping back down, testing the $29,000 level again before it ultimately goes for that run to 100,000. And it is going to take a lot more capital into the market. It's going to take people coming back to the markets, getting comfortable. A lot of the retail investors that came into the market came back in near the tops over the last year. So they are out of ammunition and have little interest to stay in the market. If they can get their money back, a lot of them are going to exit. So you need new investors, you need new capital. That's what makes price go up in any market, is more capital. So at the end of the day, that's what you need for markets to continue and move, and for their move upward. So a lot of uncertainty out there still. Investors like certainty, investors like clarity. So until we get more certainty, more clarity, and more guidance in terms of where things are headed from the war situation, from the Fed policy situation, we're going to sit here in these ranges and kind of rip up, rip down every single day with long and short liquidations and rotation of capital. That's the other thing that's been happening, is that a lot of the same investors in the markets are the same investors in crypto. So markets lately are opposite. Crypto is opposite the stock market lately. Market was up today. Crypto was up a little bit, but not as much. Markets were down the other day. Crypto was up a little bit. So they've been kind of tracking, but Bitcoin's been decoupling a little bit here and there. But generally, it's capital rotating through the markets. And a lot of it is the technical buying of the dips. And like I said, long and short liquidation. So nothing out there on the immediate horizon that is a catalyst for a return to the bull market. So right now, it's just consolidation, waiting for regulation and clarity in terms of what's going on in the economy and what our energy situation is going to look like, things like that. And any news, as you have seen, will create a knee-jerk reaction in markets as well as crypto. So we just have to keep an eye on things. These are the things I'm looking at, and I will see you in the next video. I hope you have a great day.